Did you ever notice how many people feel rich but can't get their hands on actual cash? They say, I got equity in my home, but they can't fix the AC. They can't take a last minute flight. They can't pay for the kids' emergency surgery. So let me ask you, what's the point of having $200,000 in equity if it takes you 4 weeks, a 700 credit score, and a full bank underwriting just to tap it? Equity ain't liquidity. And in a crisis, it's liquidity that saves your family, not your net worth on paper. So today, we're diving into one of the biggest myths about wealth, that home equity equals financial freedom. When in reality, if it's locked up, you're still broke. How? Let's break it down in 3, 2, 1, let's go.
Who are we? Hey, 7-figure squad. Where we go? Run it up, run it up.
What's cracking, everybody? Money Smart Guy, Matt Sapaula here, hailing to you from Dallas, Texas, and welcome back to another episode of Keep the Keys series. This series is here to help you protect your potential, not just your property. And this series is also about cutting through a lot of the financial chaos, and it gives you a lot of clarity in a world that just profits off many of us being confused. So if you're tired of guessing, hoping, crossing your fingers financially, welcome to the movement that flips the doggone script. If you're a homeowner, drop owner in the comment section below. If you're still renting, no shame, drop renter in the comment section below too as well. Because what matters isn't where you are, it's where you're going. It's the fact that you're finally learning how to what? Not only get the keys, but keep the keys. Now, quick update. We just wrapped up our national convention in Las Vegas, and the Keep the Keys book launch was a straight up hit. People lined up to get the book signed. We had late night conversations over cigars. By the way, we'll put a 30-minute conversation link right here so you can watch what that conversation looked like over Keep the Keys and cigars. And we talked about principles with people that are hungry for clarity. So this just isn't another financial series. It's a movement. And you, by watching this, you're a part of it. Now, in case you missed it, episode 1, we talked about how hustle culture keeps you broke. Episode 2, we talked about IRAs and 401ks are ticking tax time bombs. In episode 3, why equity without access is just paper wealth. And today, episode 4, we're going to expose the home equity lie. So right here in the Dallas Metroplex, we just had devastating floods. Homeowners were underwater, literally and financially. And guess what? That's $100,000 to $200,000, $300,000 in home equity, and many people have been bragging about that. In an emergency, that means nothing. When insurance is delayed, when disaster hits, and your family needs cash now, that's the danger of relying on trapped equity. Because when the storm hits, your mortgage lender doesn't care. The bills don't pause, their mortgage payment doesn't pause, the power company still wants their paycheck, but your family, they still need to eat, they still need to survive. But liquidity, now that's what saves legacies. Let me give a quick case study of a cousin with $200,000 in a life insurance retirement plan. Homeowners, property owners too as well. And instead of just building equity inside that property, they built equity, redirected some cash into the policy. They took $200,000 from their home equity, did a cash out refinance. Instead of consuming it, they conserved it. And they conserved that money inside a life insurance retirement plan, which is structured for high cash accumulation. Why? Because, as I just mentioned before, it's tax advantaged. The money grows with the upside of stock market without the downside risk. Number 2, she's got access without penalties. And number 3, she's protected from any stock market crashes or real estate market crashes that may reduce the value of the property. And number 4, no bank approval required. Now, a few months ago, she tapped about $20,000, $25,000 from her policy to do what? To invest in a business opportunity. Good for her. It doubles her income in the next 6 months. Could she have done that with her home stuck in equity? Well, not without delay, not without paperwork, not without risk, not without the bank saying, yes, ma'am, based on your credit score, based on your payment, this is what you owe us based on this interest rate. You see, this is what the wealthy do. They don't just build assets, they find ways to build liquidity. By the way, for those of you watching this right now, if you want liquidity in your life, put liquidity in the comment section below. Now, let's break this all the way down. Home equity will build your net worth. Of course it will. But liquidity will build your freedom. You want to stay liquid while still owning? Number 1, use modern life insurance tools like life insurance retirement plans. And number 2, build a side hustle that creates income leverage. And number 3, keep 3, 6, 9, 12 months of expenses liquid and accessible. And number 4, please stop overpaying your mortgage just to feel quote unquote responsible. Because sometimes that extra money is better redirected into a vehicle that grows, that protects your cash and keeps it under your control. Why? Because if you keep your money inside the property, it's stuck there. Liquidity means you don't have to ask permission when life or opportunity Things just show up, you can move. And this is exactly why I wrote the book, Keep the Keys, and why it became an Amazon bestseller in just 48 hours. We unpack 7 strategies every middle-class homeowner needs to incorporate, whether you're a homeowner or a potential future home buyer. But the one tool everybody keeps talking about is the CLARITY Scorecard. Why? Because it helps you spot the leaks. It exposes the traps, exposes the dead money that's costing you opportunities. So don't guess your way to financial peace. You gotta get clear. Let me give you a free tool for free. Go to my website at keepthekeysbook.com to not only grab a free chapter, but download your CLARITY Scorecard from that website absolutely for free, and it'll hopefully change the way you see your money forever. Listen, you've worked too hard to feel this stuck. You've sacrificed too much to have to say no in your money decisions. It's time to stop relying on systems that were built for the banks for their benefit. And you got to start using tools that were built for you. Now, this isn't about fear. It's about wise stewardship. And this platform, this movement, it's for people who are tired of asking for permission to build a legacy. So let me wrap up with this. It's not just about how much equity you have. It's about how much control you actually own. You see, you can be sitting on a $300,000 house, but if you need bank permission to touch it, that's not wealth. That's captivity. See, this episode helped clarify things for you, I hope. If so, please comment your biggest takeaway in the comment section below. And if you haven't subscribed yet, make sure you make that move and smash that subscribe button. Clarity creates movement. So let's go together. Next week, we're going deeper. You've heard the term house rich, cash poor, right? Episode 5, I'm going to talk about ownership without control is just another trap. We're exposing how the illusion of ownership is keeping families stuck. And even when you think you've done everything right, the system still makes you ask for permission to use your own money. We're talking about banks, equity lockups, and why real control is more important than real estate. You don't want to miss it. That being said, appreciate you tuning in. Until we meet again, continue to live smart, continue to love smart, and be money smart today.